Hey, everybody. Today I have Jonathan Wei of GreyStone on the show and really happy to have him here. Jonathan, would you please introduce yourself really briefly for the guests and then we'll jump into your backstory.
Oh, sure, Jonathan. Thank you for having me on the show. A little bit about my background. I was born in Saigon, Vietnam, and I grew up in New Jersey, near New York City. I was raised in New Jersey when I was young. And in the beginning, my parents said, "Hey, why don't you become a doctor or something?" And I was like, toward medical field. I was leaning toward being an eye doctor. And then I realized that I didn't like, I didn't like the medical field. So I went to a business. I went to be an accountant. And I studied business law and accounting. And then and at the end, a job fell in my lap. I was a tax accountant when I came out of college, and I've been doing taxes for like 20 something years now. And now I'm a full-time real estate investor, which but before that, my career was a tax director in large companies in the corporate world.
And so when did you make the switch?
Last February last year, I decided to leave my career and go full-time into real estate.
So what allowed you to do that?
I bought a couple of multifamily buildings, syndicated, and I was able to leave my job through the past 3 years working on acquiring buildings and also some self-storage as well.
And so those properties are cash flowing and you're basically living off the cash flow now?
Yes, they are. I have several storages and multifamilies where the cash flowing, and I live off that now. Yes.
So tell me how you got into this in the first place.
I first was working my job and I realized that wasn't passionate about my job. And as you get older, you do kind of like a more deeper soul search and you say, hey, what do I really want to do in life? Why am I here? Like, what's the purpose of my life? Me working every single day and doing taxes, it's not been fun. So I realized that for my family and I needed to build a legacy and a wealth that I can run my own business where I like what I to do and I like real estate. I used to own like a couple like residential properties in New Jersey, and I used to fix some things myself, and I like that. So I decided to go into multifamily because I saw Michael Blanc's syndicated analyzer Excel template, and since I like my math and like Excel, I went deeper into that, and I became a student in the program, and that's how I started.
And why real estate? What was it that you liked about real estate?
I always liked real estate. When I first bought my first, had a condo in New Jersey, and I rented it out, so I was really happy about that, and I really liked owning real estate. I thought it's the way that that a lot of wealthy people in America create their wealth through owning like real estate. And if you look at some of the statistics, most of them own like commercial real estate, like multifamily and sort of assets that create the generational wealth that we're looking for. So I decided to go deeper into that route.
But when you talked about sort of like not having passion for your job as a tax accountant, but feeling passionate about real estate, like that says to me that there's something beyond just the numbers or the money that you like about it. So, what's that? Because if you just wanted money, you could have just stayed as a tax accountant. Like that would have been easy. So, what was it about real estate that you liked?
The reality was that I could create my own company, create my own brand. I had the freedom to travel, spend time with my family. I was able to create a legacy and a basket for them, an eggs basket to create wealth and passive income. And what I didn't like about my job was that I was working like many hours on the weekends. I was, kind of pressured by my boss to work on the weekends, and it was just felt so hectic and so taxing that it was not good for my health. So I want to protect my own health and my own, sanity. So to do that, I had to leave that crazy tax world, basically.
And okay, so and then that happened. So how did you get to the point like, where you're able to leave? So kind of walk me through the process of where you first started doing multifamily deals, and then how you grew that to the point where you were actually able to replace your income and leave.
Yeah, so I first bought a multifamily building in Oklahoma City. It was a 56 unit in Moore, Oklahoma. And that was my first lead syndication. Before that, I just raised equity for a deal in Atlanta, Georgia. So I done maybe like by then I probably done 3-4 deals at least, leading the syndications in a couple in Oklahoma City. I had one in Atlanta, Georgia. I helped co-GP. I was a key principal in one smaller deal that we've done, and I was also mentoring people on storage and how to buy his own storage buildings and everything else. So I did that. I was kind of like a key principal role, and so I got enough momentum in those buildings and those multifamily assets that when I actually sold one of them, I think last year I sold 2 of them, produced enough significant income for me that I know that there's a runway for me to use. And also I bought another large deal end of this year that produced enough cash flow that I can live off, become financially free to scale my business higher and higher, and so hiring employees internally, basically.
So do you own some of these buildings outright, or are they all syndicated?
All these were syndicated, taught by Michael's methodology. And I syndicated most of them, and I own my own residential properties. I had 3 of them. I sold 2, and I have one left.
I see. And so what about so you mentioned you're also in self-storage. So tell me about the self-storage that you do.
Yeah, so I initially I bought the first one was in Texas, where I live. I live in Dallas, and I looked at my own state because it was growing, and everyone likes Dallas, obviously, and likes the Texas market. And it was a very competitive market, seemed like a multifamily, and I finally won best and final in one of the deals, and it's in Midland, Texas, which is kind of like an oil and gas town. And I bought that one, and that was my first RV and boat storage experience. And now I know everything about RV and boat storage after acquiring one, and that produces decent solid income. And then after I bought another one in Austin, Texas, in the Hill Country, so it's kind of like the Hill Countryside. That was really good. Then I bought another one in near Manila, Odessa, and then I bought another one in Arizona. And I helped KP in one in Savannah, Georgia, and I'm an LP in one deal that we're building a brand new construction in Charlotte, North Carolina.
And so all those self-storage deals are also syndicated, or you own those yourself?
I syndicated those self-storage deals as well. Yes.
So what are this like sort of size-wise in terms of money? How big are these deals that you've syndicated?
These the first deal was only like $1.8 million, so smaller size, Oklahoma City. And the second was like $3 million. The first storage was smaller. I think some were like $1 million to a few $1 million that I've done. Yes.
And so tell me like how you've raised money. So I know you mentioned that you started out raising money for people in Michael Blank's group or for Michael's deals. And then you started raising money for your own deals. So talk to me a bit about, how you raise money. Like what does your funnel look like? Who do you raise money from? And how do you grow your investor base?
So I go on podcasts. I have my own podcast. I go speak on some Michael Blank's events. They ask me to speak on what's working now. I'm also do a lot of networking. I'm like go to a lot of events, either on Zoom or live events. I'm here in Dallas. So I go to a lot of local events here. So people know who I am, and they know who I am. I'm a syndicator. I do storage and multifamily. And then how I raise capital is I have a network of Michael Blancs who help me raise some capital too, but I also raise my own capital through my own network, like my family and friends, my neighbors, my coworkers I used to work with. So I have a network right now, and how I get more is just through just networking and talking to people, and then I build my list through that funnel list, basically.
And so how do you talk to me a little bit about that? Because I think that people often find the process of raising money or even building an investor base to be kind of intimidating, right? Or they just don't know how to go about doing it. So I know you had sort of a bit of a ready-made network with Michael's group, but in terms of you can't, at some point you have to move beyond, if you're in a mentoring program, at some point you have to move beyond the mentoring program and kind of build your own base of people, right? So what's your process? I mean, I'll just give you an example. Like, I interviewed George Abreu not too long ago from Elevate. You probably know them. And I was like, hey, well, how did you get started with investors? And he said, I went to a lot of events. I collected a lot of business cards, and I put all the business cards into my CRM, and I just started building, an audience that way. So for you, what's the process once you meet people? What do you do?
Yeah, so I do similar to what George does. I go to events here and I get the business cards, and then I follow with them and I say I have a Zoom meeting, and I say, how you doing? Maybe we can work together and raise capital, and then we get to know each other. Like today, I had a meeting with a lunch coffee meeting at Starbucks here locally with a person I met in Dealmaker Live, and he could potentially help me raise capital. So that's how I network and how I keep in touch with them. And then once in a while, I always keep in touch with my broker. I have lunch with my brokers and everyone else. So, and then I always send some updates to my investors who's in my deals, so they know who I am, and I sometimes chat with them. And how I get new leads is I just go to a lot of events, talk to them, get them to know me, and then build that trust factor. And once they trust me, they will invest like 50,000 or whatever it is. And that's how you really get the people, get to know them. And I've been doing that a lot these days because right now multifamily is a little challenging these times. So I'm doing a lot of networking and building my equity capital raiser platform.
So, and when you say your equity capital raiser platform, what do you mean by that?
So basically, I have a CRM and I have a website and an investor portal, and then whoever I meet, and I put in my CRM, and then whoever I know, I keep track of them in my portal where, where's a potential deal. I say, hey, we might have a deal coming up. We send a little email, say we might be under contract in this deal, and if you're interested, let me know. And then there's a soft interest, and if they're interested, then they'll let me know. So that's how I know. And I also have a lot of networks with my capital raising network where they can help me raise equity as well too.
And what sort of percentage of your time would you say you spend kind of developing your investor network?
I say I spent I say right now, like a lot of time is focusing on developing my network right now, because I'm not right now jump the gun on getting a deal right now, because right now I want to wait for a good time to buy the multifamily deals. So I'm right now focusing a lot on networking, building my network base, and lining up all the equity so that when a deal comes, then I'll be ready in that situation.
But when times were sort of, I guess when the market was more active, last year or 2 years ago, how much time were you spending on essentially, marketing your business in one form or another, as opposed to actually working on deals, whether that's getting deals or managing the deals that you have? What was the breakdown of time?
Yeah, I would say most of my time was finding deals and acquiring deals, and some of it was marketing my brand and getting invested, because I was too busy with the deal flow to get a good deal. But I had partners to help me raise the equity. So I'm more like a lead sponsor role than a capital raiser.
So that's great that you mentioned that. So, because I've been kind of going down the wrong path this whole time, kind of talking about raising capital, because that just seems to be such like a thing that's on people's mind. Like, how do I get the money? How do I get the money? How do I get the money?
Mm-hmm.
You, if I'm understanding correctly, you're really more focused on finding the deals and then leaving it to other people to actually bring in the capital for you. Is that fair? Is that
that's fair. I think that's fair. That's fair. I could raise my own a fair share, but I think I rely more on other people because my time is more better served of finding deals and doing everything else. So
let's talk about that then. So, how do you find good deals? I mean, I know right now it's slow. There's a lot of people holding stuff off the market. So maybe right now is a little bit, well, let's not talk about right now, but let's talk about sort of in a typical situation. Now, how are you sourcing the deals that you found?
Normally, I have a lot of connections with brokers, and I have lunch with them. Like I said, we'll have lunch with one next week. I keep up with them. I say hello, have lunch with them, and then what happens is we gotta feel the pulse of the market, and they will tell me what everyone's doing now, so I know what's going on. And then when it's ready, I have a relationship with my lenders, my managers, and everyone else, and they'll tell me what the pulse is and when they think it will come down. So that's how I get the deal. So for example, in Oklahoma City, I network with a broker. She gave me an off-market deal. That's how I got that deal off-market in Oklahoma City. So did the 2 deals I had in Oklahoma City. So I normally do off-market deals when I buy these multifamily deals.
And that's just a function of networking with brokers, basically.
Yes. I haven't done any deal direct to sellers. I done straight to brokers, because what happened was that once I closed a couple of deals, they trust you enough that they're gonna bring you more deals.
Right. So you tend to get better better deal flow once you start closing deals in a market.
Yes, correct. And if it's a new market, you have to do a lot of like meeting, a lot of, having coffee and then kind of build that relationship and kind of, in a way, court them, right? To make sure that they understand who you are and what you're offering. And then once they believe in you, they'll send you the deals.
Where do you want to take this business? I mean, you mentioned you kind of got to the point where it supports you now so you can grow. What's your objective here? Where do you want to get to?
Right now, I'm finishing up the book called Traction, EOS system, where effectively I have to hire employees and so I'm doing quarterly rocks with Michael. We're doing quarterly rocks, so I'm valuing my quarterly rocks and doing EOS and my next point is to start hiring people to scale my business, to take on the roles of managing my storage, and maybe I have an asset manager, boots on the ground in multifamily in different territories, because that's what I'm a point where I'm a juncture where I have to hire people internally and grow basically.
I mean, where are you at right now in terms of the size of your portfolio?
Right now, well, last year I decided that because I saw the kind of writing on the wall of multifamily, so I sold all my multifamily last year. So I have nothing that I lead personally, but I have some co-GPs that lead the deals in I think in Oregon. I have some in some other places, so they can lead their deals and they're doing fine. And then for me, I lead a lot of my storage deals, so we have those running and those are doing okay. So I have like 4 deals I'm managing right now, basically.
And so the 4 deals are your storage deals that you're running?
Yes, I'm running the storages right now, and generally do well in recession. So if there's a recession, and then it actually does well because people downsize and then they put stuff away. So yeah.
And so just altogether, like how many storage units do you have in your portfolio?
I think it's like 1,500 units.
Oh wow!
Okay. Yeah, I think it's somewhere around there. I think it's like getting close to 2,000, but somewhere around there.
Oh, that's great. So do you see yourself kind of leaning more into storage or multifamily as you go forward, or are you going to continue to do both?
I get to do both. I'm a mentor for Michael Blanc, so I have some students, so I can help them get the deals done, and so I do that, and also I can find my own deals when the time is right, and then also I'm doing storage as well. So I do both verticals as well.
One other question I have is, so when did you move down to Texas? I know you said, like, your bio says you're from New Jersey, but when did you go down to Texas?
I moved down here. Oh, it's been 2000. It's been 6 years. I moved here. I supposed to move here earlier, but I couldn't convince my wife to move because she's from Brooklyn and family is rooted into Brooklyn, New York. And I grew up in New Jersey. I grew up in a Jewish town, basically in Teaneck, New Jersey, right? I grew up in a Jewish town, and what happened was I told her we had to move because New York City, New Jersey is too expensive. We cannot, it's not a great place to grow a family. And then finally I convinced her after 3 years. So we moved down here. We're very, very happy in Dallas. We see a lot of growth. We have to afford a new house here. So so that's why I'm glad I left New Jersey, because New York City is not, and right now I don't think it's that great. So
what I was getting at though, I was wondering, did this have anything to do with your real estate investing? Was that a reason that you moved down there, or were those two things just independent of each other?
I think it was just the right timing that we wanted to personally grow as a young daughter, but also it also gave me the room to grow my business, because what happened was I knew that the life in New York City was a dead end. I knew that I cannot grow in New York City, New Jersey, because there's no path forward, and I felt like in New Jersey, and I can't buy in New Jersey either. There's not much multifamily that makes sense in New Jersey and New York City, obviously. So people don't invest in there. So that's why I had to leave to a state that's more friendlier, landlord friendly. There's no income tax, and that there's a lot of growth. It's a growth engine. I see like Tesla moving down. I see like Toyota was moved to Dallas. So I see a lot of growth in here, and my brother told me there's a lot of growth in here. So I jumped on the bandwagon. So,
and are you? So you mentioned that you're kind of focused on. I know you mentioned a few towns like Midland and Odessa, and Austin, where you have invested in storage. So are you? I know that what you had before was kind of spread around, but are you really just purely focused on Texas now in terms of your own deals?
Yeah, I only focus on really 2 states, Arizona and Texas. So I like the Austin area a lot. So I'm trying to focus on that. I like Dallas too. So if there's a really good deal in multifamily, I would consider that. I also like the Phoenix market. That's where I like, and I might even consider Prescott too, another area. I'm in Prescott, so in the storage, so I might consider that area as well.
And what is it about those areas that you like, other than simply just population growth, or is it basically population growth that's driving, your investing?
Yeah, it's just I look at kind of like the new Bawa's demographics, and basically there's a lot of population growth in those areas. Because why? Because I have a storage facility, and we look at the trends. We analyze every single day, and we say, where are people coming from? And we see Kansas City, Missouri, mostly California. They're moving into Phoenix and Prescott. Why? Because they don't like California, so like New York City. So they come into those areas and it's growing and it's exploding. So based on my demographic trends, I know what the demand is now for kind of storage and multifamily. And I'm also invested as an LP in one of the deals in Phoenix. So I know what kind of growth and kind of rents we're getting from the reports I get. So I'm looking at those trends. You know what? That's a pretty good market. If we can get a good basis, I mean, if I can get a pretty good price point when I come in, then that would make sense to invest in those areas.
So if you were sort of starting out right now, what advice did you have for people who are getting started?
Yeah, I would say if you were me, like I guess 5 years ago when I started around, being a student in Michael Blanc, I would say, I was hire a mentor or accelerate your growth, partner someone who's experienced, and it will cut your time down. And also just be very careful with the deals you go into. Make sure you're a right property manager. That's very critical. And especially the on-site manager who is on-site is really critical, because that person sees your tenants every day and they build a relationship informally. So what happens is if that person doesn't do a good job for you or doesn't do, it's not good, then it's going to go down. So that person has to do a good job, and the management company has to do a good job in managing them. And you have to make sure you asset manage them very well so that it doesn't go down. Basically, that's the most critical thing. And have a state where area where you can believe that there's a rent growth, that there's people moving in, and that you can rent out fairly quickly. Not a stagnant town where very small and you can't get much growth in there. You want close to a big city where you have good property managers located, where you can find different property managers if you don't feel like that one is right for you. Whereas you go to a tertiary town and it's only 40, 50 units, you can have a very difficult time finding good people, good skilled laborers, and good management companies. And you might be stuck with one or two that down there that's not really that great, and it's going to hurt you for the few years you're holding it for.
So you've talked a lot about, finding a mentor. If someone is out there looking for a mentor, what are the things that you think that they should be looking for? Like, what is it that makes a good mentor?
A good mentor is someone who cares about your objectives, who wants you to succeed, who's not selfish in helping you, someone who will give you good advice and guidance on you achieving your goals, and someone who wants to see your success, basically. And that person should give you advice on, I guess, how to underwrite deals or how to raise capital and how, and stuff like that. And you have to do a lot of work to make sure you can get there. I know it's a little challenging these days. That's why it's a little bit more difficult. But, I think the opportunities will be coming, for the next, 12 months, 6 months. It should be coming. So,
Well, what kinds of questions should they be asking, though? I mean, it may be difficult to determine ahead of time whether somebody is a good mentor or not. So what kinds of questions should somebody be asking of a potential mentor if they're thinking of, hiring someone, paying them to be a mentor? How do they evaluate somebody?
oh, okay. So basically, you should look at the track record and have they done full cycle. If they've done like full cycle, that's more experience than someone who just did one deal. So ideally, you want someone who could done a couple of full cycles, or who done like a few deals that done full cycle. So they can tell you what the selling experience is, and what's the buying experience is, and what's the operational asset management is. And if they have done all that and been through the pains and the pain points, then you can learn from them. So you can avoid the pain points, minimize the pain point, at least minimize it. And that's a good mentor, because then they know they can kind of foresee if you kind of fall to the same, almost going to the same trap. They can help you and steer away from that, so you're not blindsided by by that experience.
So any other kind of like final thoughts for, people getting started in the business?
I say, if you really want, if you're true to your heart and you're very passionate about it, then just like myself, then yeah, you should go into it. But it's knowing that right now the market's a little challenging. There will be opportunities, obviously, when it goes, if the market crashes and there's more, it goes down more as the economy goes down, recession hits. There'll be opportunities. So I think it's a good time if you're really serious about it. So it's a full-time commitment. It's hard to do it part-time. You know, I did it, but it's hard. It's harder. Yeah, and that's what I'll say. Just follow your heart, and if you like it, you should go for it. So.
And if anybody wants to get in touch with you, and follow up with you, maybe join your investor list or learn more about what you're doing, what's the best way for them to contact you?
Oh, just send me an email, info@greystonecapgroup.com.
GreyStoneCapital.com.
Yeah, capgroup.com, CAP
Oh,
group.com.
okay.
Yep.
GreyStoneCapGroup.com. Great. Well, thanks, Jonathan. I really appreciate your time today, and it was great getting to know you a bit.
Good. Thank you, Jonathan. I really appreciate coming on your show.